Welcome to the Deep Dive. Ready for a deep dive into market trends and the latest financial news?
Like your own personal Wall Street crash course.
That's the idea. I'm your host as always, and we've got our financial expert here to guide us through today's briefing from PantheonAI.
Think of it as our financial time capsule, taking us back to December 3rd, 2024.
A snapshot of that day in the financial world. So, are you ready to decode the market moves and maybe even unearth some hidden opportunities?
Let's jump right in.
Perfect. Let's kick things off with a quick market overview. Kind of a mixed bag, isn't it?
A real tug-of-war, you could say.
I like that analogy. So on one side, we have the Nasdaq, powered by all those innovative tech companies, closing up 0.75%.
Significant optimism there.
Yeah.
But then you look at the Dow, representing more of the industrial giants, and it takes a dip, down 0.3%.
Interesting contrast, right? Investors seem pretty jazzed about the future of tech, but maybe a little hesitant about those traditional industries.
Exactly. And to throw another wrench in the gears, the Russell 2000 and the S&P 500 barely budged. Almost like investors are holding their breath, waiting to see which way the wind blows.
And speaking of holding their breath, the crypto world seems to be mirroring that uncertainty.
Definitely seeing some red there. Bitcoin and Ethereum both took a hit, each dropping more than 1%.
Crypto's always been a bit of a roller coaster, but these drops could be a sign that investors are shifting their focus, waiting for clearer signals.
Possibly. And adding to the suspense, we have the Federal Reserve keeping a close eye on everything.
Oh, the Fed. Always watching.
Well, Fed Governor Chris Waller did highlight 5 economic releases that everyone's waiting for, and one of them dropped today. This one could really shake things up.
Okay, now I'm intrigued. No spoilers, but paint a picture for us. How significant is this release? What's at stake here?
Imagine this. The Fed is debating whether to cut interest rates. Now, if they do, it could mean cheaper borrowing, which could lead to businesses expanding, more people buying homes and cars, maybe even a boost to the stock market.
So a rate cut could be like a shot of adrenaline for the economy.
Exactly. But of course, there's always a flip side.
There always is, right?
Lower rates can sometimes lead to inflation, making those everyday things we buy a little more expensive. It's a balancing act, and this economic release could be the deciding factor.
Talk about a cliffhanger. And while we're all waiting with bated breath for the Fed's next move, there's another interesting tidbit from our source.
Oh, what's that?
They're saying that being a contrarian, betting against the crowd, isn't paying off like it used to.
The contrarian conundrum. Citigroup strategists have noticed that going against the grain isn't yielding the same returns these days.
It makes you wonder, doesn't it? Isn't there always a place for going against the grain? What if everyone else is wrong about a trend?
You've got a point. There will always be those who succeed by zigging when everyone else sags. But this shift might suggest that the market is becoming more efficient. Information travels so fast these days that it's harder to find those hidden gems or exploit overlooked opportunities.
So maybe the rules of the game are changing.
Perhaps. It's definitely worth keeping an eye on.
Absolutely. Okay, let's zoom in on some specific business news that could directly impact our listeners.
That's good.
Starting with some drama in the steel industry. U.S. Steel, their shares took a hit after former President Trump doubled down on his promise to block that massive $14 billion sale to Nippon Steel.
Politics and business, always intertwined.
Right. Even after leaving office, Trump's stance on trade is still influencing things. Now, for something completely different, let's blast off to the sector that everyone's talking about these days.
Space.
You got it. SpaceX is soaring to new heights with a valuation hitting $350 billion. That's bigger than the GDP of many countries.
SpaceX is really leading the charge in this new space age. Investors are definitely betting big on its potential. And it's not just about space tourism, it's about satellite technology, resource exploration, maybe even, someday, colonizing other planets.
Wow, owning a piece of that future. But let's bring it back down to earth for a moment and talk about something that could benefit your portfolio directly. AT&T is planning $20 billion in stock buybacks.
Now, for those who aren't familiar with buybacks, imagine a company using its cash to buy back its own shares from the market. This reduces the number of outstanding shares, which can increase the value of the remaining shares.
So good news for AT&T stockholders.
Potentially, yes. Buybacks can signal that a company believes its stock is undervalued. But it's not a foolproof strategy. Sometimes they're used to manipulate stock prices in the short term, or it might indicate that a company is lacking other growth opportunities.
So buybacks, potentially good, but not a guaranteed slam dunk. Got it. Now let's move into the arena of mergers and acquisitions. We've got two big deals to unpack.
All right, lay 'em on me.
First up, the banking sector. United Community Banks is acquiring A&B Holdings, which owns American National Bank.
This is part of a bigger trend we're seeing, the consolidation of the banking industry. Smaller banks are finding it tougher to compete, so joining forces with larger institutions allows them to save money and expand their reach.
But what does this mean for the average consumer like me? Are we going to see fewer choices and maybe even higher fees?
That's a valid concern. Mergers can sometimes lead to branch closures and less competition, but they can also lead to a wider range of services and potentially better technology as institutions combine resources. It's a mixed bag.
A mixed bag, all right. Now let's move from traditional banking to a different kind of power play. BlackRock, one of the world's largest asset managers, is making a massive $12 billion acquisition. They're buying HPS Investment Partners.
Interesting. That's a big move.
It is. And they're buying a huge chunk of what's called the private credit market.
Private credit, what's that all about?
Imagine companies needing loans but not wanting to go through those big banks we were just talking about. That's where private credit comes in. It's like an alternative system where companies can get funding from private lenders.
Ah, I see. So this deal gives BlackRock even more influence over how money flows in the economy. Who gets access to capital and at what cost?
Exactly. It really highlights how interconnected everything is. Now, a quick detour to Japan for a story that highlights the ethical side of business. The CEO of Nomura, a major financial services group, is taking a pay cut.
A pay cut, why is that?
It's following a scandal involving a former employee who was charged with some serious financial crimes.
So the CEO is taking responsibility.
It seems that way. It's not just about punishing one person. It's about acknowledging that leadership comes with responsibility. Actions have consequences, even at the highest levels.
Makes you think.
It does. Okay, we've covered a lot of ground already, but things are about to get even more thought-provoking. The source brings up a concern that's been making headlines. The U.S. dollar potentially losing its status as the world's reserve currency.
Ah, yes. The dollar's potential dethroning. That's a big one.
It is. But before we get into the potential consequences, can you give us a quick primer on what it even means for a currency to be the world's reserve currency? Why should we care?
Think of it this way. The world's reserve currency is the currency that's most widely used for international transactions. Trading oil, holding central bank reserves, it's the go-to currency. For decades, that's been the U.S. dollar. And having that status gives a country major economic and geopolitical influence.
So if the dollar loses that top spot, what happens? Does my morning latte get a little pricier, or are we talking bigger problem?
We're talking much bigger problems. A weaker dollar could lead to higher inflation, meaning our purchasing power decreases, and everything from groceries to gas becomes more expensive. And it's not just about consumer goods. A decline in the dollar could impact the value of U.S. assets, investments, even retirement savings.
Kim, I'm starting to understand the gravity of this, but why is this happening now? Is it just a natural cycle or is something else going on?
There are several factors. The rise of other global powers, like China, for one. Their currency, the yuan, is becoming more influential in international markets. Then there are concerns about the growing U.S. national debt, which some investors see as a red flag. And we can't forget about cryptocurrencies, vying for a place in the global financial system.
Sounds like a perfect storm brewing.
It's definitely something to monitor closely.
Okay, with that global context in mind, let's zero in on some specific sectors where the action is heating up, starting with tech, always evolving, always impacting our lives in new ways. But the source hints that it's not just about those familiar giants, the FAAing stocks anymore.
Right. We're seeing a lot of innovation and investment pouring into diverse areas of tech, from artificial intelligence to cloud computing to the mind-boggling world of quantum technologies.
It's like the tech landscape is exploding. But how does this translate to our everyday lives? Can you give us some concrete examples of how these technologies are already shaping the world around us?
Think about AI, for instance. It's already changing how we work, shop, and even connect with each other. And then there's cloud computing, which lets us access information and services from anywhere. As for quantum computing, well, that has the potential to revolutionize everything from medicine to material science.
Wow, stepping into a science fiction novel.
Almost. Change can be both exhilarating and a little unsettling at the same time.
Absolutely. Okay, let's shift gears to a sector undergoing a major transformation as the world grapples with climate change.
Energy.
You got it. The source points to a shift toward sustainable practices, but is it just hype? Or are companies truly changing their ways?
Well, there's definitely a lot of buzz around sustainability, but there's also real action happening. Companies are investing billions in renewable energy sources,
Mm.
solar, wind power, and it's not just about environmental responsibility, it's becoming increasingly cost-effective.
So it's a win-win for the planet and the bottom line.
Potentially, yes. The transition to a cleaner energy future will be complex and require a lot of investment, but it's a necessary step for both environmental and economic sustainability.
And finally, we can't forget about the world of finance itself, which is being disrupted from within by the rise of fintech.
Right. Fintech is revolutionizing everything from banking and borrowing to investing, leveraging technology to make financial services more accessible, affordable, and efficient. We're talking mobile banking apps, peer-to-peer lending platforms, robo-advisors, the whole 9 yards.
Like finance is catching up to the digital age, and we're all along for the ride.
Exactly. Fintech is empowering consumers and challenging the traditional financial landscape in some really exciting ways.
Okay, that's a lot to process. We've covered market moves, the Fed's looming decisions, major business deals, and technological advancements that are shaping our world. But before we wrap things up for this part of our deep dive, there's one more crucial element to explore:
What's that?
the global stage.
Ah, yes. We can't forget about the global stage. What happens in Europe, Asia, and around the world has a huge impact on our economy here in the U.S.
So even though we're focusing on U.S. markets, we're really talking about a global web of interconnectedness.
Precisely. And understanding those connections is crucial if we want to make sense of the financial world as a whole.
All right, so are you ready to take a global perspective?
Let's do it.
Fantastic. We'll be right back after a quick word from our sponsors. Don't go anywhere. Welcome back to the deep dive. Before we jump to those messages, we were getting into how interconnected the global economy really is. Like, it's mind-blowing how things happening on the other side of the world can impact us right here in the U.S.
Yeah, it's true. No man is an island,
Yeah.
right? Same goes for economies. We're all part of this global ecosystem, and what happens in one part of the world, it affects everyone else.
I love that analogy, but can you give us some real-world examples? How do decisions made in other countries actually impact the U.S. market?
Okay, let's say, for example, China decides to slap tariffs on goods imported from the U.S.
Tariffs.
Yeah, like taxes on imports. That could make American products pricier in China, which hurts sales, and could even lead to job losses here at home.
So a policy decision in Beijing could directly impact American businesses and workers.
Absolutely. Or let's imagine the European Central Bank decides to raise interest rates.
Okay, what happens then?
Well, that could make the euro stronger compared to the dollar, which basically means European goods become more expensive for American consumers.
So my European vacation just got a lot more expensive because of something that happened in Frankfurt.
It's definitely possible. And those are just two examples. We're talking about these global supply chains, currencies fluctuating, geopolitical events. Everything's connected.
It's like a giant game of economic chess, where each move creates these ripple effects across the board. So what's the takeaway for the everyday investor? Should we be glued to international news, checking headlines every minute?
I wouldn't say obsess over every little detail, but it's smart to understand the bigger trends and how they might influence your investments. For example, if you're heavily invested in a company that does a lot of business in China, you'd want to pay attention to U.S.-China trade relations.
Makes sense. So it's about being informed but not overwhelmed. And I guess that's where sources like this PantheonAI briefing come in handy. They help us cut through the noise.
Exactly. They do all the heavy lifting, analyzing tons of data and giving us those key insights that we need.
Speaking of key insights, let's talk about the elephant in the room, the topic that's been generating a lot of buzz lately: the U.S. dollar potentially losing its status as the world's reserve currency.
The dollar's potential dethroning. It's a topic that's been debated for years, but it seems like it's gaining more traction these days.
Before we get into the doom and gloom scenarios, I think it's important to understand why this is even a possibility. The dollar has been the dominant global currency for so long, it seems almost unthinkable that it could be replaced.
You're right, the dollar has had a good run. But the world is changing, and a few things are putting the dollar's dominance at risk.
Like what?
Well, for one, we've got the rise of other major economies, particularly China. As China's economy keeps growing, its currency, the yuan, is becoming more powerful internationally. Some analysts think the yuan could eventually compete with the dollar for the top spot.
So it's like a global power shift playing out in the currency markets.
Exactly. Another thing is the worry about the U.S.'s growing national debt. Some investors are concerned that the U.S. government might eventually have trouble paying its bills, which could hurt confidence in the dollar.
That's a scary thought, and I guess the whole cryptocurrency thing adds another layer of complexity to all this.
Absolutely. Cryptocurrencies like Bitcoin and Ethereum, they operate independently of any government or central bank. They haven't really become mainstream reserve currencies yet, but they definitely represent a potential alternative to the traditional financial system.
So it's like a three-way race for global currency dominance.
Yeah.
The dollar, the yuan, and crypto.
It's a bit more nuanced than that, but that's a good way to visualize it. The point is, things are shifting, and the dollar's position isn't as secure as it used to be.
Okay, let's play out a hypothetical scenario. Let's say the dollar does lose its reserve currency status. What would that actually look like for everyday Americans? Would we be paying for our groceries in yuan or Bitcoin all of a sudden?
It wouldn't happen overnight, but we'd probably see a gradual transition with some pretty noticeable impacts. One of the first things would be a drop in the dollar's value compared to other currencies.
Meaning everything gets more expensive?
Basically, yes.
Yeah.
Imported goods would definitely become more expensive, which could lead to inflation. American companies doing business overseas would face challenges too, because their earnings wouldn't be worth as much when converted back to dollars.
And traveling abroad, would our vacations suddenly become super pricey?
Definitely. Imagine you're planning a European trip. If the euro becomes worth more than the dollar, your travel expenses would skyrocket. Hotels, meals, souvenirs, everything would cost more.
So a weaker dollar basically makes us poorer, both at home and when we travel.
That's the bottom line. It could also weaken America's influence on the world stage.
Okay, that's a pretty bleak picture. Is there anything we can do to stop this from happening, or at least soften the blow?
It's the million-dollar question, and one that economists and policymakers are wrestling with. But for us individually, we can stay informed about global economic trends and make smart financial decisions.
Like what? Give us some concrete steps we can take.
Well, diversifying your investments is always a good idea. Don't put all your eggs in one basket, especially one that's tied to the dollar.
Spread the risk?
Exactly. You might also want to think about investing in assets that are denominated in other currencies, like foreign stocks or bonds.
So kind of hedging our bets against a potential dollar decline.
Exactly. And of course, having a solid emergency fund is always wise in case things get rocky.
Okay, diversify, hedge your bets, and have an emergency fund. Got it. Any other words of wisdom for our listeners as they navigate this crazy financial world?
Remember, knowledge is power. The more you understand about the economy, the better decisions you'll make.
And don't be afraid to ask questions. If you're not sure about something, ask a financial advisor or do your own research. There's tons of information out there to help you learn and become a better investor.
Couldn't agree more. It's all about being proactive and taking charge of your financial future.
Okay, now that we've explored the global landscape and the potential challenges facing the US dollar, let's shift gears and talk about some specific sectors that are poised for growth and innovation.
Sounds good. What sectors are you thinking about?
Well, let's start with the one that's always pushing the boundaries and shaping the future. Technology. We already touched on some of the mind-blowing advancements happening in artificial intelligence, cloud computing, and quantum technologies.
Right, and it's important to remember that technology isn't just about gadgets and gizmos. It's about transforming industries and solving real-world problems.
Exactly. So let's dive deeper into some specific examples of how technology is already changing our lives and shaping the future.
Let's start with artificial intelligence, or AI. This field is evolving at an incredible pace. We're already seeing AI being used in everything from self-driving cars to personalized medicine.
It's amazing to think that computers can now learn and adapt in ways that were once considered science fiction.
Absolutely. AI has the potential to revolutionize countless industries, from healthcare and transportation to finance and education. And then there's cloud computing, which has really become the backbone of the modern digital world.
Can you explain cloud computing in simple terms? What does it actually mean?
Imagine a giant network of servers that store and process data, making it accessible from anywhere with an internet connection. That's cloud computing in a nutshell. It's what allows us to access our emails, stream movies, and collaborate on projects from virtually anywhere.
So it's like having a giant shared computer in the sky.
That's a great analogy. And because cloud computing is so scalable and cost-effective, it's giving businesses of all sizes access to really powerful computing resources without having to spend a ton of money on hardware and infrastructure.
It's a game changer, for sure. And speaking of game changers, we can't forget about quantum computing. It's still early days, but it has enormous potential.
Quantum computing uses the principles of quantum mechanics to perform calculations at speeds that are just unimaginable with traditional computers.
Wow. So what are some of the potential applications of this mind-blowing technology?
Quantum computing could revolutionize fields like medicine, materials science, and cryptography. Imagine developing new drugs and materials at lightning speed, or creating unbreakable encryption that could completely transform cybersecurity.
It's exciting and a little scary at the same time.
Absolutely. And while it's still in its early stages, it's a field worth paying attention to as it continues to develop.
Okay, let's move from the mind-bending world of quantum computing to a sector that's facing some real challenges and undergoing a massive transformation: energy. We've talked about the shift towards more sustainable practices, but that transition to a cleaner energy future, it won't be easy.
You're right. The energy sector is dealing with a lot of complex issues: climate change, resource scarcity, geopolitical tensions, technological disruptions. It's a lot to juggle.
So, what are some of the key trends shaping the energy landscape, and what do they mean for investors and consumers?
One of the biggest trends is the continued growth of renewable energy sources, solar and wind power especially. As the costs of those technologies keep coming down, they're becoming more and more competitive with traditional fossil fuels.
That's great news.
It is. And governments all over the world are putting policies in place to encourage people to adopt renewable energy, which is really accelerating this trend.
So, it seems like the world is finally getting serious about tackling climate change.
There's definitely a growing sense of urgency, and the energy sector is a key player in this whole transition. But it's not just about renewables. We're also seeing advancements in energy storage, smart grids, energy efficiency tech, all of which are essential for building a more sustainable energy future.
It sounds like the energy sector is getting a complete makeover, from the types of energy we use to how we manage and consume it.
Exactly. And this transformation is creating a ton of challenges and opportunities for investors and companies.
Speaking of challenges and opportunities, let's shift our focus to the financial sector itself, which is also undergoing a massive transformation thanks to the rise of fintech. We touched on some of the key trends earlier, but I think it's worth exploring how fintech is impacting consumers in more tangible ways.
Absolutely. Fintech is all about making financial services more accessible and affordable for everyone. It's about leveling the playing field.
I love that idea.
Me too. Think about mobile banking apps, for example. They've totally changed how we manage our money. We can check our balances, transfer funds, pay bills, all from our phones. It's incredible.
It's so convenient. And it's not just banking, right? Fintech is disrupting lending, investing, even insurance.
You got it. Peer-to-peer lending platforms let people lend and borrow money directly from each other, cutting out those traditional banks. Robo-advisors use algorithms to offer personalized investment advice for way less than what human advisors charge. And insurtech companies are making insurance more affordable and transparent by using technology.
It's amazing how technology is reshaping the whole financial landscape.
It really is. And all this disruption is making the financial ecosystem more competitive and innovative, which ultimately benefits consumers.
Okay, so we've covered a lot of ground today, from the global economic landscape to all the amazing advancements happening in technology, energy, and finance.
It's been quite a journey.
It has. But before we wrap things up, I want to circle back to something the PantheonAI briefing emphasized: the importance of strong economic fundamentals.
Right. That's key. It's easy to get caught up in the daily ups and downs of the market, but we need to remember that the economy is a complex system that moves in cycles.
So even with all the potential challenges and disruptions, you're saying the underlying foundation of the economy is still strong.
That's what the data seems to indicate. The briefing points to things like low unemployment, strong consumer spending, and continued business investment as signs of a healthy economy.
That's good to hear. So what does that mean for someone like me just trying to figure out this whole financial world?
It means it's important to think long-term and not freak out when the market inevitably hits some bumps in the road.
So stay calm, stay informed, and stay the course.
Exactly. And remember, the market is always changing, so it's crucial to stay curious and keep learning.
Speaking of learning, where can our listeners go to dive deeper into everything we've talked about today? Any resources you recommend?
There are so many great resources out there, both online and in libraries. Reputable financial news websites, economic journals, even podcasts like this one. They can all offer valuable insights.
Absolutely. And don't be afraid to ask questions, consider different perspectives, and challenge your own assumptions.
The more you learn, the better equipped you'll be to make informed decisions about your financial future.
Well said. Well, that brings us to the end of our deep dive into market trends and financial news. I hope you found it insightful, engaging, and maybe even a little empowering.
I know I did.
But before we sign off, I want to leave you with a final thought. The briefing stressed that while the market might be volatile in the short term, the fundamentals are strong. What does that mean for you? How does it shape your outlook on the future of the economy and your own financial journey?
That's a great question to reflect on.
Because the market is always evolving. The only thing that's constant is change. So stay curious, stay informed, and be ready for whatever comes next. Thanks for joining us on the Deep Dive.
Until next time.
And we're back with the Deep Dive. Picking up right where we left off, exploring the potential consequences if the US dollar loses its top spot in the global currency arena.
Yeah, we were just getting into that. It's a complicated issue, but it boiled down to this.
Yeah.
The dollar has been the go-to currency for international trade and finance for decades, but that dominance is being challenged.
So let's paint a picture. What would it actually look like if the dollar was no longer the king of the hill? Would we need to swap our dollars for yuan or Bitcoin to buy groceries?
It wouldn't be that drastic or sudden, more like a gradual shift, but with some noticeable changes along the way. One of the first things we'd probably see is a drop in the dollar's value compared to other currencies.
Meaning my dream trip to Europe just got a whole lot more expensive.
Exactly. And it's not just vacations. Imports, from clothes to electronics, would likely get pricier too. This could fuel something called inflation, which means our money doesn't buy as much as it used to.
Ouch, that hits close to home. And it's not just about those fun purchases, right? A weaker dollar could affect investments and even retirement savings.
That's right. American companies doing business overseas would see their earnings shrink when they convert back to dollars. And if the dollar loses its safe haven status, the U.S. might become less attractive for foreign investments, potentially slowing down our economic growth.
So this isn't just about paying an extra buck for my coffee. We're talking about potential ripple effects throughout the whole economy.
Exactly. And beyond economics, there are geopolitical implications to consider. A weaker dollar could mean a shift in global power, with other countries and their currencies gaining influence.
Okay, this is starting to feel a bit unsettling, but is there anything we can do to prepare? Or are we just along for the ride?
We can't really control global currency markets, but we can take steps to manage our own financial well-being. Like we talked about earlier, diversifying our investments is key. Don't put all your eggs in one basket, especially if that basket is tied to the dollar.
Spread the risk. Makes sense. What else can we do?
Consider putting some of your money in assets that are based on other currencies, like foreign stocks or bonds. And it's always a good idea to have a solid emergency fund, just in case things get a little bumpy.
Diversify, hedge my bets, and have an emergency fund ready. Got it.
Any other pearls of wisdom for our listeners as they navigate the twists and turns of the financial world? Remember, knowledge is power. The more you understand about the economy, the better equipped you'll be to make those tough financial decisions.
And don't be afraid to ask questions. If something seems confusing, ask a financial advisor or do some research. There are so many resources out there to help you learn and become a savvy investor.
Absolutely. It's all about being proactive and taking control of your financial future.
Well said. Well, I think that about wraps up our deep dive into market trends and financial news for today. I hope you found it insightful and maybe even a bit inspiring.
I certainly did. It's always fascinating to explore these topics.
The financial world is full of surprises, both good and bad. The key is to stay curious, stay engaged, and never stop learning. Thanks for joining us on the deep dive. We'll see you next time.